Good morning. This is Larry McMillan with a stock market update on Monday, July 3rd. I hope you're having a great, perhaps 4-day 4th of July weekend. The market made new relative highs on Friday, and it seems to be in a completely bullish mode right now. It left a gap on its chart. It traded above 44.50 for the first time in quite a while. That now opens up targets of just a little bit above 4,500, where it could run into some minor resistance. And then the next major resistance is up at 46.50. Could take a while to get there, but there's really not a whole lot standing in the way yet at this point. The McMillan volatility band sell signal is still in place, although that would be stopped out on a move above the +4 standard deviation modified Bollinger Band. The equity only put call ratios made new lows, so that means they remain bullish for stocks. They are in overbought territory, but again, as we've said many times, overbought does not mean sell. So these indicators will remain bullish until they roll over and begin to trend higher. Breadth has been strong again this week. It flips back and forth quite freely. And so both our breadth oscillators are on buy signals, and they are also in overbought territory. There were 225 new highs on the New York Stock Exchange on Friday. That's a big number. That's the biggest number since November of 2021. And so this indicator also remains bullish. Again, you might say it's overbought at this level. But again, overbought conditions when the market is breaking out to new relative highs are to be expected and to be welcomed, actually. The VIX has sort of hung in there around 14. I mean, it's trading a little bit below that, but it's really not going a lot lower, even though SPX is going higher. And so the trend of VIX is still downward, and that's bullish for stocks. But VIX itself is, we're watching it to see if it, spikes higher. If it doesn't spike higher, then the market can freely move upwards without that. But a spiking VIX would be a problem. So far, that hasn't really been an occurrence, but we will keep an eye on that. The construct of volatility derivatives is positive as well, with the term structures of the futures and the volatility indices sloping upwards. So overall, we're still maintaining our core bullish position. We will trade other indicators around that. We are raising stops, rolling calls up as they get deeply in the money and things like that to protect profits. But this is still a bull short term at least, and perhaps much longer than that. So we're going to stay, core bullish position. I invite you to visit our website when you come back from your holiday. And meanwhile, have a great week and a great week trading if you are trading this week.